Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute and FX rundown. We're going to try things a little different today. It's been a hectic day in the markets, and we're going to cover it all. We're going to start with FX first. You know, the one thing that grabbed our attention most this morning was that the euro did not follow through to the downside despite Eurozone CPI missing expectations this morning. Now, this is a number that rarely deviates from expectations, so to see it miss and to see the euro close on the lows on the electronic session yesterday after FOMC and the dollar index close on the highs after such, did not see that follow through after that CPI number, really started to say something. If it can't go lower on bearish news, we're talking about the euro, then maybe it's ready to go higher. The dollar index has consolidated back, and really it's trading back below 92.30. Still, it has not taken out that initial sell-off area after the FOMC yesterday. Non-farm payroll is coming up tomorrow, and this is what everybody's waiting for. But first, run through some of the data points today. It was mixed for the U.S., and really after that Eurozone CPI, that mixed U.S. data really kind of kept things consolidating. You know, the euro is about a penny away from its 200-day moving average, and the dollar index is just under a penny away from its. But if we get a big miss on non-farm payroll tomorrow, I think some of these numbers could come into play. You're going to see a lot of the shorts in the dollar index, as well as a lot of the longs in the euro, look to reposition. They've been wiped out of this market after these moves. Non-farm payroll tomorrow, the expectations are for 189,000 jobs created, but this isn't the big part. The big part is wage growth. Average hourly earnings are expected to come in at plus 0.2%. If this number comes in hot, it's going to increase the dollar. And if it comes in line, I think we could see the dollar work its way, some of this momentum from today work its way lower, and the job growth number is going to be more important. But if it misses, I think we can start to see this number, the dollar index, bring the dollar index down to that 200-day moving average. Maybe not by Friday's close, but we could see that by Monday. So we're watching out for that tomorrow on non-farm payroll. And with the euro, moving on to the yen, it's trading around its 200-day moving average, and it's going to be very important to watch the data tomorrow out of the U.S. if you're trading the yen. There's nothing coming out of Japan tonight. Earlier today, that was a holiday for Japan. So it's about a quarter of a penny above its 200-day moving average, or a quarter of a point when talking about the yen, above its 200-day moving average right now. And we got to watch that. As it holds, it can start to bring some support. And we've been neutral to bullish in the yen. However, if this 200-day moving average starts to hold, it could start to give you a little bit of more support. Moving on to the Aussie dollar. The Aussie dollar has hit our major three-star support, 74.70 to 75.01. The Aussie has been the only one that we've been bearish of the four that we usually cover. Now, this has extended to the downside, and now we're going to be neutral because we do think the dollar has started, the U.S. dollar has started at the top, and you have this major three-star support that the Aussie has pounded against, and it cannot break through. So we're going to be neutral on this Aussie now going forward, but there is some upside potential if that U.S. dollar weakens tomorrow. So there's some ways to look to play that because the Aussie has and is been oversold. Lastly, there is the RBA minutes tonight, so you want to keep an eye on that for volatility. And then moving on to the Canadian dollar, it's trading around this level that we've had, 77.70, 77.90. It's holding it and consolidating. Last time, about a month ago, that it held and consolidated a level in this manner, it turned upwards. Now, we do think there is some support here. It's a major three-star level for us. However, there is some IVPMI coming out of Canada tomorrow, but ultimately it's going to be as well susceptible to what happens in the U.S. dollar due to that non-farm payroll. Canadian jobs are not tomorrow, they'll be next week. So continue to watch the Canadian, but crude oil, as that's trading better, could bring some support. Crude oil has again held our major three-star support down at that 67. We talked about it in the Morning Express. And yes, now we're moving on to the midday market minute sort of part of our coverage here. The crude oil held that major three-star support. And we talked about it in the Morning Express, and it's now trading back out above 68 bucks. This is great heading into the weekend. There's some great momentum here in crude oil, and we've been bullish. We remain bullish. Same thing. The gold has held that previous lows. Big psychological $1,300 mark. Moving off of that, it's going to be very susceptible. The same way we talked about the euro, the same way the dollar may go lower if that non-farm payroll number misses. Gold will see a lot of support on such. Gold's struggling to kind of regain and hold and trade out above that its 200-day moving average, which comes in today about 13.13. Watch that number closely on a weekly closing basis. If it can get a little momentum, the next big level is just below 13.30, and that's going to be our three-star resistance. Lastly, the S&P. The S&P, it moved through a lot of our support levels today, major 3-star support, and the S&P, we had a 27.11, 27.15. When it got back out above there, it started to get a lot of momentum. The low of the day was our next support level, 25.91. That did hold. Very choppy trade, very tough trade to be a buyer, but once it started getting momentum back out above that 200 moving average, that low has provided a lot of steam higher. But at the same time, there is non-farm payroll tomorrow. The real interesting thing about that is this could be easily a Goldilocks number for the S&P. After that FOMC minutes yesterday, they're essentially ready or willing to allow inflation to run hot. If wage growth misses tomorrow, that's great for the stocks. But if it does come in hot, it's not going to cause a sell-off in stocks the same way we probably would have seen in February or March. So very potential Goldilocks number there. Struggling at the 26.36 area. If it's able to get out above there overnight or into today's close, about 20 minutes left in the session here, then we're able to get some more momentum overnight and potentially brings back that 26.50 area into play. But watch out for that, and watch out for news coming out of China and the U.S. Trade talks there. So that could be a good catalyst, or it also could be a poor catalyst for the market. Give us a call. As always, we're here. We're going to be here early tomorrow ahead of the non-farm payroll number. Feel free to give us a call, 312-278-0500. You can email us, info@bluelinefutures.com. You can sign up for a free trial of our research on our website. And remember, futures trading involves substantial risk of loss, is not suitable for all investors. Thanks a lot.